Hi, this is Zak Mir with the Major Markets Review for Wednesday, the 13th of September, starting off with the FTSE, which is stalled, but in a good place, just above the 50-day moving average, 74.73. That's rising mildly, and above that we're looking for the 200-day line and the top of that falling February trend channel, which has bugged us all year, 76.30. Hopefully we could see that by the end of this month. If we break back below the 50-day line, then there's the risk of another test of 7,400, which was the initial September support, and also support back in July for a while. On to the DAX, and the DAX has been struggling over the recent past, really against that floor of the December rising trend channel. That was around 15,600. There's now the risk of a test of the 200-day line, 15,500, but hopefully, given that that is still rising, we will bounce off that and then head higher again. If you're cautious, probably waiting for a proper clearance of the 50-day moving average at 15,900 to then take us back to the highs. But at the moment, that seems a relatively less likely scenario. In fact, the scenario which may be coming into play is that we head down to that May support line projection of 15,100, even if we then head higher after that. On to the Dow, and here you can see that it's in a better place than the DAX is. We've got that uptrend line there from October. That's at 34,300. Hopefully that will hold, or we will get an end of day close back above the 50-day line, 15,800, to take us back to the highs of the year at 35,500 plus. On the downside, a break of that October line risks a test of post-June support and the 200-day moving average at 33,800. On to the S&P, which is in similar place to the Dow, just peaking out recently at the 50-day moving average, 44.80. Below that, there's the risk of a test of the rising trend channel, or at least the uptrend line there from back in May at 4,400, but we're not expecting anything worse than that, even though the RSI is now just tipped onto the wrong side of the neutral 50 level. End of day close through 44.80. Obviously, then we've got the big resistance here, which is 45.30. Which has been in place since the beginning of last month, and that needs to be cracked. Overall, the pattern, while we're above the May support line, is up to 4,700, maybe for later in the year. Nasdaq is next. The Nasdaq 100. We've got the Nasdaq also sort of toying with the 50-day line, but from the right side, from above. 15,300, the area there. Above that, we can head up to 16,000, maybe by the end of this month. The overall pattern here is of an uptrend line which has been in place since January. That's currently going through the 15,100 zone, and we want to stay above that really to maintain the uptrend, even though obviously in the recent past Apple has been a drag on this particular market. Moving on to Bitcoin, and here you can see that we have still the rather painful consolidation that we've had either side of that uptrend line there from back in January. That's normally around 26,000, so we're trading either side of that. It's good news, I suppose, that we've just tested that June support area towards 24,800, and above that, looking for the market to at least retest August resistance in the 27,800 zone near the 200-day moving average. Probably the easiest thing here, though, is to wait for a clearance of the 200-day line to resume the uptrend or the recovery that we've had since the beginning of the year. There's also a bullish divergence in terms of the RSI, so an uptrend line there, even though recently we've had lower lows for this market, so that might be the first sign of a turnaround for Bitcoin. Moving along to the Great British Pound, which perhaps in the recent past has not been so great, but here you can see that we're just back on the 200-day moving average level within this converging triangle, which has been in place since June. Below that, we've got the support there from back in May around $1.23, so that's potentially the target, while we remain below $1.26, which is that July resistance line. We've got the 50-day line now falling, which isn't great, and so that does suggest that there is not only the risk of $1.23, but also a worst-case scenario by the end of next month down to $1.20, maybe on the basis that interest rates have peaked with the shrinking economy that we have. Onto the commodities, and starting off with gold, and here you can see that gold is bouncing above the 200-day line. We tested it last month around $1,900, $1,910, and above the 200-day line now at 1930, looking for a break of that 1970 level, which is a May resistance line. Best case scenario, maybe by later in the year, would be up to 2050, but obviously this market has struggled every time it gets above the 2000 level. Finishing off with crude oil, and here you can see that the recent bullishness is still trying to consolidate itself above the basically post-December resistance was there around the $84 area. Above that, we're looking for progress within a rising trend channel from the beginning of May. That's heading towards $95, and hopefully we'll see that by the end of this month, or maybe going into the first part of October. But the key here is holding the $84 area ahead of a move to the $95 zone, which was basically resistance back in November. That's it for me today. More updates tomorrow.